Hi everyone, welcome. Thank you for coming along today to this webinar. By way of introduction, my name's Sheerin and I'm a partner at Chapman Tripp. I specialise in financial services regulation, and it's been my pleasure this year to be part of the initial committee preparing New Zealand's first Stewardship Code. Today I'm joined by Simon O'Connor and Jorge Waayman, who are also part of the committee. Simon and Jorge are going to tell you more about the code and what it means to be a signatory. For those who don't know, Simon is the CEO of RIA, the Responsible Investment Association for Australasia. Simon works with RIA's almost 500 member organisations that represent over US $29 trillion in assets, with the goal of delivering on RIA's mission of promoting, advocating for and supporting approaches to responsible investment that align capital with achieving healthy and sustainable society, environment and economy. Simon is active across the region and internationally in responsible investment and sustainable finance initiatives. He sits in as advisory member to the Australasian Sustainable Finance Institute, working group member of the Toitū Tahua Centre for Sustainable Finance, chair of the Global Sustainable Investment Alliance, as well as being a member of the National Advisory Board on Impact Investing in New Zealand. Jorge joined Harbour Asset Management in 2016 as an investment analyst focused on environmental, social and governance research. In early 2021, Jorge was appointed as Harbour's Manager of ESG Research, which involves leading the responsible investment strategy, coordinating policies, engagement and proxy voting activity across investments, and participating in wider industry collaboration. And Harbour is also one of the founding signatories to the code. So as to our format today, I've got a few questions for Simon and Jorge to get us started, and then we'll open up at the end for audience Q&A from all of you. And I've got a few extra questions up my sleeve just in case you're a little bit quiet. Some of you may also have been at the CFA Society webinar on the code earlier this week. Just to put that into context, this session is intended as a follow-up to that for those who are curious about becoming a signatory to the code. So Simon, let's start with some questions for you. Why is stewardship such an important tool for investors?
Thanks, Penny, and welcome everyone. Nice to be here chatting with you today. Look, I think stewardship has become such a significant part and tool of the responsible investment and sustainable finance sector globally at the moment. It has really become a reflection of one of the strongest ways investors have to influence for more sustainable outcomes in their portfolio, and it really is following a focus globally on the elevated expectation that investors take more of an active ownership approach, not active versus passive in that sense, but active actually truly owning and taking responsibility for the assets that they're invested in and owning. I think increasingly, as well as we follow the emergence of ESG and sustainability issues and how these are much more impactful across economies, well beyond just single entities within a portfolio. They become much more these systemic issues that investors are trying to grapple with. And in that context, and particularly in light of things such as climate change, but many other issues as well, these become much harder to manage from an investor perspective, purely for portfolio stock selection, from a portfolio stock selection approach, and really requires a much more integrated thinking in terms of how we use our ownership to influence for change, to manage risk, to underpin long-term value creation, and ultimately to protect our consumers and beneficiaries, to protect their retirement savings. And so I think we're seeing globally this increased focus on stewardship as a critical tool of investors, all investors, not just responsible investors. It really does build on a long history, in fact, of investors looking at how they preserve long-term capital, where that focus has strongly been on governance. Often traditionally, this really is focusing more broadly on environmental and social issues. So we've seen this shift by regulators globally to move towards requiring investors to take a much stronger position in terms of managing these extra financial risks, things such as climate change. You're seeing regulators requiring that. You're even seeing regulators in parts of the world starting to require that fiduciaries are considering sustainability as part of being a prudent person, as part of a sort of core direct. So it's flipping the kind of requirements, and stewardship becomes a critical approach to manage in for these risks. So now we're at a position where globally there's something in the order of 40 codes in place around the world over 20 plus jurisdictions for those reasons.
Thanks, Simon. So tell us a bit more about what a code does in terms of driving stewardship practices.
Yeah, so I guess a code's really important because what it does, it codifies practices. It really highlights what does it mean to do stewardship well? What are the component parts of stewardship? And it brings transparency and accountability to the practices of stewardship. So we really see codes capturing and laying out the component parts of what is required for a comprehensive stewardship approach by investors. So they're really valuable and useful as a guidance tool in that regard. It sets expectations of what good practice entails, and it helps to sort of apply more consistency in the application of stewardship. And so if we probably as a bit of a example of this, if you look at the 9 principles that are encapsulated in the New Zealand Stewardship Code, these are quite consistent with codes around the world. And I guess if we go to the next slide, just to give you a bit of a sense of, I guess, what the gap is it's trying to fill, a little bit of data from some of the research that we've done as RIA it's been released over the last couple of months. So this is from our benchmarking report. And what we see is that corporate engagement and shareholder action has become the 3rd most prevalent strategy applied by responsible investors. I guess if we move through to the next couple of slides, what we start seeing when we've just in the last couple of weeks launched a stewardship report, a state of the market of stewardship across Australasia. So this data is based on Aussie and New Zealand data. But it shows that there's quite a lot of activity in terms of policies around stewardship. We're seeing more and more in Australia and New Zealand of commitments and policies. If we go to the next slide, we start seeing that there's a real mix of activities. Pretty good amount of activity in the market in terms of collaborating, in terms of voting shares, having policies. But if we go to the next slide, I think what sort of becomes evident is there's really a mixed level of application of stewardship practices. So whilst we see some policies, some disclosure, some good disclosure, some on outcomes, some on activities, what we're not yet seeing is this kind of comprehensive approach across our region of a clear and coherent stewardship approach in terms of by responsible investors. And I think there is room then to kind of really lift the practices, get some more consistency across how stewardship is applied by investors, and ultimately help to sort of augment, I guess, transparency and accountability. Because really the fact is today we're in a market where scrutiny has elevated really rapidly from consumers, but also the expectations of our regulators to substantiate what we're doing, to provide evidence behind what we're doing and the commitments we're making is really elevated. And so a stewardship code really helps to set out what that would entail, what good transparency and disclosure and reporting and activities really entail. So I think that's kind of the intention here.
Great, thanks, Simon. And just to sort of expand on that a little bit more, can you tell us about why New Zealand needed its own code and the sort of the 9 principles of the code?
Yeah, so I think it helps to kind of elevate the current state of the market. I think we're at a transition point in the New Zealand market where, one, there was an absence of a stewardship code, where many of the major markets globally now have codes in place. So in the Australian market, there are 2 codes as an asset owner and asset management code that have been in place for a few years now. Other markets are really quite mature on this and have, are up to their 3rd or 4th iteration of this. So the UK market's very well advanced there. So what we had was a market with lots of activity, but really a diverse array of activity, not a great deal of substantiation and disclosure and reporting on those activities, and yet this stepping up as this focus on engagement and voting as one of the tools of responsible investors. So what we aim to sort of bring, I guess, in the New Zealand market is to step up that consistency of approach and application. I think what it kind of responds to as well is that there's a shift going on here in the course of a maturing market in the NZ context, where we're moving from an approach with a heavy reliance on exclusions and divestment as a primary kind of mechanism and tool to actually engagement and ownership and influencing through ownership to a really strong part of the responsible investment approach. And so the need then to put in place and codify a really clear approach to stewardship, and then follow that through with really strong disclosure and transparency around stewardship is kind of critical. So this helps to fast track and accelerate that and really professionalise the approach in the NZ market.
Great, thanks, Simon. And what can we learn from global developments in stewardship?
I think what we see most of all is there is just a huge focus and acceleration on stewardship as becoming really the most influential tool available to responsible investors, to influence for change, to protect capital, to influence particularly around issues such as climate risk, net zero transition. I think that's what's really accelerating things internationally, this acknowledgement that you can't really diversify your way around or away from climate change risk. You can't divest your way out of climate change risk. And so I think what we're seeing is the large investors globally really acknowledging this and realizing they actually need to have a seat at the table. They need to be actively influencing strategy of the companies they invest in to ensure that their portfolio constituents are navigating successfully and smoothly a transition that will protect value and lead to a net zero future consistent with legislated goals, international agreements. So I think climate is really sharpening the focus here. But I think also and we'll talk a little bit more about this, I guess, but some of the details in the code itself in the NZ context are definitely consistent with some of the focus areas we're seeing internationally. So the UK is really strengthening their focus on the need for investors under the code to focus on systemic risks, broader system-wide kind of risks, etc. So that's a couple of the things we're seeing.
Great, thanks, Simon. And George, now to the signatory perspective. Why was it important for you to become a signatory?
Sure. So I guess for us at Harbour, stewardship has always been a core part of our overall responsible investing approach. And that's reflected by our commitment to the principles for responsible investment back in Harbour's inception back in 2010. And one of those principles centers around the concept of being active owners and incorporating ESG issues into our ownership policies and practices. So with this in mind, I think one of the main reasons for becoming a signatory is about being able to walk the talk, and show that our stewardship practices are meeting a mutually agreed standard from the responsible investment industry, and the fact that it's also applicable to Aotearoa New Zealand. And it's also a learning opportunity to further develop what we already do and identify gaps based on what best practice should look like by going through all of the various requirements and guidance in the code and making adjustments where we see fit. Because before this code, unless you signed up to other international codes, there was not really an agreed definition or standards of what good looks like in terms of the processes and disclosure in New Zealand. So this meant that there's a real lack of comparability and transparency in some cases between managers and asset owners. So I think having a code in place with a good amount of signatories will really help remedy that. So another key benefit I think is the brand and reputation impact, since you're showing that you have committed to this higher standard of practice and reporting by signing up to the code. And I think that the sooner you can make this commitment, the more this shows you as a leader rather than it being seen as more of a compliance obligation. And in my view, there'll be a rising pressure from clients, prospects, and regulators, like Simon mentioned as well, to align with the stewardship code like this, especially with the heightened focus on greenwashing as of late. So I think this code really helps to combat that through having a structured set of requirements that flow right from the governance of stewardship all the way through to reporting and reviewing. Another one of the appealing factors, I think, of becoming a signatory is that there's an online forum that's been set up by the Centre for Signatories Only that really helps facilitate the collaborative aspect of stewardship. And so going forward, there'll be some events and resources shared through that forum that will be helpful, I think, for signatories in meeting the code requirements and just for stewardship more generally.
Thanks, George. And what was Harbour's internal process like when you were deciding whether to become a signatory?
Yeah, so this started out communicating to all Harbour staff about what stewardship is and what this new code is about, to really help educate and promote buy-in internally. It then led to thorough discussions with our management team and board, going through all the various pros and cons of becoming a signatory. So everyone initially was in principle already supportive of the code itself and becoming a signatory, but we had to consider some of, I guess, the practical challenges that it would present. So one of these was whether we had the sufficient resource in place to meet the requirements. This was particularly relevant given, there's a lot of other regulatory developments in the ESG space at the moment, like the new climate-related disclosure regime here in New Zealand. Despite this, we felt that we did have sufficient capacity, considering we think we already have strong alignment with the code, and the fact that there is that 2-year time period before the first stewardship report is due. So I do think that it is valuable for signatories to do, or if you're thinking about becoming a signatory, I think it's valuable to do an initial high-level check of where your current stewardship practice is at, and comparing that with the code requirements to see what that expected workload would likely be like, and any associated resourcing that might be required. The code is also on a comply explain basis, meaning that you don't necessarily have to be fully compliant with all of the requirements right off the bat, but on the same side of the coin, you probably don't. It wouldn't be the best look if you had more explanations rather than points of compliance. Other barriers I think could include, there is a financial cost of becoming a signatory, and also, I guess, a reputational risk if you're unable to fully follow through on moving towards full compliance of the code. This will all depend on your organization, since we all vary in our size, levels of resourcing, and starting points along our stewardship journeys. So ultimately for us, this came down to a board sign-off process, that, yeah, did end up approving Harbour becoming signatories to the code.
Right. And what does being a signatory mean for Harbour in the year ahead?
Yeah, so for us in the year ahead, we plan to do a more detailed analysis, going through point by point through all of the code's requirements and guidance, and really assessing how aligned we already are in the areas where we can make some improvements. And this will really influence our annual review of our stewardship policy, our processes, and exercising our engagement and voting strategies, and then flowing through to how that's all reported to our clients and the wider public as well. And it's also an opportunity, I think, to collaborate with others, on relevant engagement or policy efforts. And we look forward to learning more through any resources and events that will be in the pipeline from the centre and/or RIA.
Fantastic. Thanks, George. Simon, if I can just go back to you, I'm wondering if you can talk us all through the current signatories to the code, where we're at the moment in December 2022.
Yeah, well, it's great that we've started out really strongly with a strong cohort of founding signatories, and we really, are appreciative of them moving pretty quickly to sign up and kind of set us a strong foundation there. And the names of those first founding signatories are on the screen in front of you there. We are still open for founding signatories to join us until the end of this calendar year. If you want to be known as a founding signatory on into, long into the future, this is the time to come in and speak to us. And we're really pleased we're in conversation with a few others there. So, and then in an ongoing manner, we're looking for ongoing signatory growth beyond that. But I think this sets us up really well as a starting point. Some of the key managers, KiwiSaver providers, asset owners across the market there, and really signalling the strength of this as a new tool in the marketplace. And I think it will start setting some expectations for the kind of level of expected practices in the industry and in the market, across Aotearoa New Zealand.
And Simon, can you give us a bit of an overview of the governance of the code, the Secretariat that's co-hosted by RIA and the Centre for Sustainable Finance, and how that's going to work?
Sure. So yes, we're really pleased to be jointly Secretariat on this code, with the Centre for Sustainable Finance. So we thought this was the best way of nursing this code into life jointly as a joint initiative. And so really pleased to be doing that together. So our job is really to help facilitate the code's implementation, bringing it to life. We're still, one of the big focus points right now is building up the core governance committee. So there'll be a code governing committee that really is tasked with overseeing the effective implementation of the code, reviewing and doing a sort of annual reporting on progress with the code, effectively looking at an annual report on compliance areas for improvement. There's a code review built in a 2-yearly basis. And so that code, we're in the process right now, working thankfully with Chapman Tripp, who's helping us to just set out very clearly the terms of reference of that committee and to establish that committee. So we would expect that very early in the new calendar year that we'll be coming forward with the members and the establishment of that code committee, which will be a really important step. In the interim, as the Secretariat, our job's really to help support and nurse this code into life, to help facilitate members and signatories coming on board. Our job is then to really support the capability build and some of the education offerings in the marketplace to ensure people are getting up to speed on what it means. So we're working together through RIA and the Centre's work program, where you'll be seeing a number of activities. We've been building up the community of practice for code signatories, so that's now established as well, and it's really helping and supporting signatories getting up to speed with the code. What I kind of foresee throughout calendar year 23, I think there's a really good opportunity for us also to kind of facilitate the sharing of collaborations through code signatories, which I really hope will be a bit of a core outcome between signatories. And I know already in conversations, there's a lot of talk about sort of some overlap of some of the engagement activities already underway within the market and opportunities to bring those more strongly together. Certainly globally, we see the collaboration around engagement is just stepping up and accelerating quite a lot. Examples such as Climate Action 100. And I think there's a real opportunity in the NZ market to also really step up in that area. So we hope to be able to play a role in facilitating that too.
And how does an organisation become a signatory to the code?
Well, that's really easy. We have a really nice document on the code website for you that really clearly steps out the steps, really clearly articulates what you're committing to do as a signatory of the code. I think is a really useful document for you to take back internally, as we heard from George, to really do the thinking, understand the commitment internally before signing on to that. But effectively, it requires the signatory to adapt the code, to commit to that comply or explain basis, to publicly report on the code, so within 2 years. But of course, you can do that earlier, and it's really great to see this emergence of stewardship reporting as part of broader responsible investment reporting emerging very rapidly in both of the Australia and New Zealand market at the moment. There's some articulation of what that means in terms of the opportunities to drive collaborations, the leadership. There is an annual cost of being a signatory, and that helps to support the Secretariat and the Code Governance Committee such that we can kind of facilitate that. And then finally, there is a requirement to sign a form, make sure there's an organisational commitment and bring that to the Secretariat. So yeah, I'd encourage you to have a look at that form on the website.
Thanks, Simon. So now it's time for questions from the audience out there. If you do have any questions, please do submit them through the Q&A facility. I haven't received any as yet, but hopefully some will be coming through shortly. Just to get us started though, Simon or George, one of you might like to answer this. Is the New Zealand code more stringent than the UK code?
That's a great question, and it's one we're hearing a little bit at the moment. I think with the development of the code for New Zealand, there was a really thorough investigation of codes around the world undertaken. And so people may know, there was a cross-industry committee that helped to develop this code, led by Erica Miles, who sort of chaired that and drove it, and a whole lot of work to kind of investigate codes around the world. Probably the one where the committee landed on in terms of drawing most heavily from was the UK code. And I think and so I would say that They are really quite well aligned, the UK code and the New Zealand code, I think, as a sort of high-level summary. I wouldn't say the NZ code is more stringent. I'd say actually in some ways the UK code may take things further, as it's just had an update and a review, and they've sort of added some further requirements as they kind of move signatories along and mature the activity. So I would say the UK code's more stringent. I think what's really clear in the NZ code is this clear pathway of kind of strengthening over time the code, but doing that in a way that kind of moves and helps build the capability of the industry here as well. So we know we're going to get to, and we know the pathway to get there. Just the other thing that's quite interesting, I guess, to note on this question is, we have a lot of international managers active in the NZ market. In fact, when we did our survey of managers across our region, there are a lot who are already signatories to the UK code, for example. And so it's worth noting that, we would hope that if you're a signatory to the UK code, it should facilitate a much easier alignment with the NZ code as well. And so it's really our hope that we will see some of the international managers with a presence in New Zealand also signing up to the NZ code. George might have more to add, though, on that as a practitioner.
Yeah, I think for the most part, you covered it well, Simon. So, I mean, yeah, I think the UK code is globally seen as the gold standard. So we did, draw heavily from that as the basis of influencing a lot of what the end principles would be. And so, I mean, I don't think you'll see drastically new requirements that, if you're already aligned with the UK code, it won't represent a significant, burden, I guess, or onerous new compliance burden, if you were to become a New Zealand signatory, because there is globally, I think, a consensus on what global stewardship principles should be like. But I guess that kind of segues into, what's unique or different about our New Zealand code, right? So I think really one of the key points of difference is the incorporation of the Te Ao Māori worldview, particularly on the focus of, creating value, not just over 5-10 years, but over multiple generations. And so I think, another way is the focus on stewardship, creating positive real world outcomes rather than just focusing on that relationship between asset owners and managers and their clients and beneficiaries. And then finally, I'd say a standalone principle on incorporating material ESG issues is, I think, a key strength that's not reflected in every code around the world. Sometimes it's just, one principle or one recommendation of a overarching principle on engagement rather than being separated out. So I think it's quite important to reflect the growth and importance of that, and being able to integrate that in the way that you are stewards of your client's capital.
Okay, we've just had a question come through now. Is becoming a signatory open to ministries? If yes, are there considerations given to potential conflicts between government mandates and stewardship codes?
That's a great question. There certainly is a role that government plays as an investor and as a steward in that way. So I think there would be a way of absolutely applying government entities to the code. Whether ministries themselves, I just have to think that through. But I think what's clear here is that this is applicable for a whole range of investors and investment organisations, and indeed investors across different asset classes. This is not purely a listed equities thing. So, Penny, I wonder if you might have more to add on that from a sort of government and ministry perspective specifically.
Yes, gosh, it is a very interesting question. I suspect it might deal with the particular government or ministry in question as well, and what their mandate is and what they're doing. So yes, a very interesting question, but not something that I think was fully sort of worked through by the committee as part of this initial stage of preparing the code. Great, thank you. And if there are any other questions, please do send those through to us. In the meantime, Simon, George, can you outline for us what signatories are required to do in terms of reporting?
Sure, George, do you want to have a go? You probably know what it means in a real implementation perspective.
Yeah, sure. So, I mean, one of the key requirements we already kind of touched on is that there would be an annual stewardship report required that would, cover each of the code's principles on that comply or explain basis. So that might differ from, what investors are already doing. So, some of us are reporting on our engagement and voting activities, but this will be different in that you will have to address each of the, code's principles. And so in practice, this looks at describing how you go about conducting your engagement and voting activities, how they contribute to the goals of stewardship, i.e. creating long-term value for your clients and beneficiaries and sustainable outcomes for the planet, society and economy. And there's also plenty of guidance in the code on how you might approach, what to include in stewardship policies and reports, which, yeah, I think will be useful.
And I think to add to that is this doesn't necessarily mean, as and everyone sort of is overwhelmed by the reporting obligations right right now, but this doesn't necessarily mean another standalone report. This may well be part of existing sort of reporting on a responsible investment reporting. It may be, and I would expect many of you would have elements of the disclosure already in play. So it probably means enhancing, strengthening, building out all elements of the code commitments into your existing reporting, and there is no obligation that this be a stewardship report standalone additional piece of disclosure, but it may well be, and we see a lot of that, but it may also be integrated into other existing reporting requirements. So there's certainly flexibility in that implementation.
And as you know, we were very careful working through the process of the committee to think about how this fits with other obligations that organisations already have. Can you tell us a bit more about how you see the code sitting within the existing framework that we have in terms of legislation, but other things that are already out there, and what you've seen from the FMA through that process and their view on the code?
Yeah, I would love to, but Penny, this was going to be one of those questions I was going to even throw back at you, the moderator, because I think one of the most interesting pieces of work that was done throughout this process was that mapping exercise about existing obligations under various regulatory environments that already exist. And what I think, we endeavoured to do, but also were pleased to find, is that this aligns really well with multiple existing obligations around governance, codes of conduct. And so, again, I think that's important because it's not just, oh no, here's a new set of obligations. It actually aligns quite well with some of those existing obligations and builds out in other areas. And you can probably talk more specifically than me, Penny, to that. But I think that's really important. I think I'll just take part two of your question then. On the FMA, we're really intentional to engage really strongly the FMA throughout this process. We're really pleased that they, through at least 2 rounds of really formal feedback they provided to us in terms of shaping this up and ensuring really good alignment with their expectations. I mean, really importantly, the code governing committee does not aim to replicate or replace the role of regulators in any way, but we think it does strengthen and respond to a number of existing requirements there. And as George pointed out, partly this is helping on the greenwashing side in terms of providing more substantiation of claims and activity, but also in sort of code of conduct and governance side. So Penny, I was going to throw a question to you actually, how well does it align with existing regulatory sort of arrangements for financial services firms in New Zealand?
Yes, yeah, look, it aligns very well as the short answer. There aren't any conflicting obligations in any way. As you discussed, we did do a very comprehensive exercise at the beginning of this process when we were looking at the code and what the principles might be and what was already out there. And we looked for things that might be in conflict, that might cause a difficulty. And we also looked for things where there was overlap, just to make sure that there was a need for a code and that we weren't doing something that was actually already covered by things that were out there. And what we found in that gap analysis exercise that we did was there weren't any red flags, there weren't any showstoppers or things that meant this couldn't happen. There were elements of overlap that were there, but nothing so significant that meant that the code was already addressed elsewhere. So the need for a code became very, very apparent through that process, and what value it could add. And yeah, so it seems like it's something that will fit in nicely for organisations with their other obligations, and something that will enhance their compliance and their approach to stewardship. That's great. Any other comments from you, Simon or George, before we look to wrap up today?
I think from my perspective, our hope is that this really helps to kind of strengthen and codify and lift practice around stewardship as this really important focus area for a responsible investment community. I think the code, I think it's a great document. I'd really encourage you to read it. It's a really accessible, document. It's practically a really good guidance document. It sort of sets out quite clearly what good practice looks like. So I hope and I think it's a really great document and is really helpful in that sense. I think it's really timely that this industry does step up in their sort of sophistication, disclosure, accountability around stewardship activities. And so I think this is a really important sort of additional piece of that kind of sustainable finance infrastructure as we build up a stronger financial sector across Aotearoa New Zealand. So I really encourage you to dive into it. I'd really encourage you to reach out to ourselves or the centre for further questions if you have an interest in it. And ultimately, we would love to see more signatories joining on. I think with that strong cohort underpinning it, I think it'll be really influential across the market and across corporate issuers and others in the NZ market as well, and really lift ESG practices, management, risk management, etc. So yeah, that's probably all, Penny. Thanks.
Great, thank you. And actually, just George, before I head to you for final comments, we just had another question come in, which dovetails in, I think, nicely with what you were just discussing, Simon. Oh, and another one now. They're coming in thick and fast. Will the Governance Committee and/or Secretariat audit the stewardship reports?
Yeah, so the Governance Committee will review to ensure the stewardship reports are meeting the requirements of the code. So the precise mechanism will be determined, and I'm not going to overstate where that's going to land right now. But we see, for example, the UK Stewardship Code, where signatories to the code can be told they're not meeting the requirements of the code and are ultimately either required to resubmit and change their reporting or are being removed from the code. So that governing committee will be tasked with holding signatories to account. And I think that's really important. The precise mechanism used will kind of be determined in this sort of terms of reference development phase. But yeah, in that sense, there will be a review of the reports being submitted to ensure they are meeting the requirements of the code. And I think that's critical for the credibility of the code as well.
And we've just had another question. Where can we get more information on the multi-generational approach to positive outcomes?
Oh, that's great. That's something that I think is ultimately the long-term investing perspective of which a stewardship code helps to kind of integrate more comprehensively. Yash, I don't know that I have a particular source of information on that right now, but I think a lot of what we kind of talk about in the work we do here is really trying to extend the thinking and time horizons of an approach to investing that is considering ESG risks, and necessarily we're forced to do that through things such as climate change. And so I think a lot of the work we do is about extending that time horizon. Stewardship certainly is in line with that. And, I guess some of the original thinking around the Stewardship Code in the UK came out from Professor John Kay's review of long-termism in equity markets in the UK. And this was a mechanism to kind of try to avert the short-termism within markets. So Yash, that's not a very good answer to your question. I'm sorry I don't have a specific document to point to, but I guess this is absolutely about supporting that longer generational approach.
Thank you. And George, any final comments from you?
Yeah, I'd just say at first glance, the Stewardship Code and all the requirements can look quite daunting, I think, but I'd say don't be discouraged, and because there is a lot of these which is just adding structure to what you may already be doing. And there is some time for capacity building and resources and plenty of other signatories to kind of draw from on a collaborative sense. So everyone's on their own journey, and I think showing this commitment to the code is a great step in the right direction, and everyone can kind of move towards that full compliance over the longer term.
Great. Well, thank you everyone for coming along today, and to Simon and George for sharing their insights with us. We hope you found this session useful. If you do have any further questions, please do direct them to the Code Secretariat. RIA and the Centre for Sustainable Finance, or reach out via info@stewardshipcode.nz. Thank you again, everyone, and have a good afternoon.
Thanks all.